The market's reaction to Donald Trump's victory in the presidential election has been even more surprising than the result itself. And while in the end, the price action in the lead-up to Trump's win was a rerun of Brexit, both in terms of financial markets and bookmaker odds, the rally in stock markets since then needs explanation. Why such a positive response to something that the markets had been fearing for so long? While the rally in the US stocks may have petered out a little, as the chart shows, the US Dow Jones is at fresh record highs. So how does that align with the uncertainty that Trump's victory brings? Firstly, the prospect of aggressive tax cuts, with the corporate rate potentially being slashed from 35% to 15%, has obvious short-term upside to corporate earnings. And with the talk of dismantling the Dodd-Frank financial regulation laws, US bank shares have rallied strongly. Secondly, the planned infrastructure investment, upgrading America's roads, waterways and public transport, has encouraged a view that US growth may accelerate next year, although both of those strategies seem to ignore the impact on US debt. And thirdly, many of the more controversial policies around immigration, protectionism and foreign policy seem to have been dismissed as election promises which may struggle to get full support from Congress, despite the clean sweep for the Republicans. In other words, the rhetoric may not be matched by real change in foreign policy. How this plays out, in particular with China, will be fascinating. Both countries may have too much at stake to alter the status quo. For Australia, the biggest risk with Trump was always around free trade agreements and commodity prices. And here, the Trans-Pacific Partnership will almost certainly be unwound, but commodity prices have not been adversely impacted. Indeed, bulk commodities such as iron ore and coal continue to move sharply higher. The other unexpected impact on Australia and global markets is a growing expectation that inflation in the US will move higher, with associated higher interest rates around the globe. And while that's very speculative, the prospect of higher global inflation is potentially a game changer here and overseas. And finally, the latest jobs data locally was reasonable at face value in terms of full-time jobs, which rose 41,500. However, the revision lower of September's fall leaves the 3-month average in negative territory, and the 5.6% unemployment rate appears flattering when considering the degree of underemployment evident. So rates on hold for the RBA, and even the prospect of rate rises on the horizon, but a lot of water to flow under the bridge between now and then, locally, in the US, and in our most important trade dependency, in China. And that's the market update from Bendigo Bank.